Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value invest. And today I give you my weekly update for week 24 of 2021 of my real money portfolio. And the performance overall of my real money portfolio since the start of the 2nd of December 2019 is 63.78% compared to 33.8% of the S&P 500 over the same time span. So overall a very good result so far. In the last week my portfolio really suffered and underperformed the S&P 500 by far, and this is really a thing to think about and to think about what to do with that. And so the topics of this video is: what is it in my portfolio, a crash, a drawdown, and what to do next. Then I will go through the transactions, the dividends, and the overall performance. So let's start. But before we start, don't forget to subscribe and ring the notification bell to never miss another video, and then you will get the weekly update on my portfolio every weekend, and also one or two analyses of interesting stocks in my view. Please subscribe and join me on my road as a long-term value investor. Thank you. So, of course, every time when you have a drawdown in your portfolio, you get a little bit scared and fear trickle in. And so the question is what to do next. And as I showed you before, the performance overall with 63.78%, of course, since the start is still great, still very good. I never expected that when I started in December 2019. And so overall everything is fine. And also when you look at every single stock in my portfolio, then you just see that the performance is quite good. And so everything really still good, nothing to worry about. But then of course when you look at the last 2 weeks, then you see that some of the stocks really came back in the price, especially the stocks from the financial sector as Wells Fargo, JP Morgan, Allstate, or Progressive, Bank of Nova Scotia too. And so then of course you have to think about what to do. At every point, of course, I have the opportunity just to take all my cards from the table or the money from the table and just wait for a crash or a real correction in the market. But of course, nobody can time the market, and so you never know if it will get more up or down or when will be a crash, whatever. And so this can't be the solution, and I will not sell just out of fear or panic. And the key point, and then you come back to the biggest investors ever. When you look at Warren Buffett, of course, he holds his positions for long periods of time and don't care about the stock price so much overall. And then also Peter Lynch say, you have to know what you own and know why you own it. And that's key. You just have to know what you have in your portfolio and especially the worth of the company you have in your portfolio. Because in the end, with your stocks, you own a part of a business and you have to be happy with the business. And when you have the view on the business, the main view on the business and not on the stock price, then the fluctuation of the stock price is not that important anymore. And so when I take a look at every single company in my portfolio, I'm still very happy because these are good, or some are even great businesses, and I'm really happy to be an owner of these businesses, even of course with my little money is just a very small share of the companies. But still I have to view like a business owner. And then of course everything changes. The whole view changes a lot. And still, of course, it hurts when the stock price goes down and the value of your portfolio lose. But that's the way it is in the stock market. And so the only rational thing is to look at the businesses and at the value of the businesses to make rational decisions. Therefore, of course, before you buy, you have to analyze the businesses to be sure, or as sure as possible, that you have a good or great business. And therefore, I made a video about all the stocks in my portfolio, and you find this on the playlist of my on my channel. So you can check this out, and there I explain why and when I bought these companies in the first place. I go through the management, through the business model, calculate the intrinsic value, and then tell you why I decide to buy. So feel free to check this out. And then, of course, you have to know the value of the things you own, and therefore I have a table with all the companies in my portfolio, and there you can see my calculated intrinsic value for every business, the current price, and also the distance to the intrinsic value. And there you see some are overvalued right now. This is the red numbers, the minus numbers. So like Coca-Cola or Berkshire seemed overvalued right now, not as much as I would sell them now, but overvalued, so also no reason to add, of course. And then with the black numbers, you see the companies which are undervalued in my view, and especially when you look at MI Homes, Alibaba, Allstate, Tencent, and so on. It seems like they are quite a bit undervalued, and so over time I will add more of the companies where I think they are undervalued, because this is the theory, sooner or later the companies will come back to the fair value, and then of course you have gains. And this worked very good with the companies which are overvalued now, and hopefully it will also work good with the companies which are undervalued now. That's the whole process, that's the whole theory behind it. And there is no reason to sell a good or great business as long as the business model really works and the company make a lot of money. And all of these companies in my portfolio are quite profitable, and so there's no reason to sell as long as the company is not way overvalued, because when a company is way overvalued, then of course the future return will be just very low, and then you have to look for better opportunities in the market. And then next to the companies I have in my portfolio, I also have a watch list, and this is just the same theory. I just analyzed all of these businesses. You find also deeper analysis on my channel, videos about every of these companies, and then I just wait for the right moment to buy these great companies way under the intrinsic value. You see here some of them are undervalued already, but this is not enough to take a first position there, because the margin of safety is just not big enough. And that's the whole idea. That's the way to do it for me. And this means be patient to buy good and great businesses to good prices, to cheap, to discount prices, and then just wait until it goes back to the fair value or even over it. And so then you can make profits. Then take a look at the transactions of last week. And there's nothing to say because I didn't do any transactions last week. So nothing on this part this week. So go on to the dividends. And I received a very small dividend last week from Jack Henry, $5.05. So not a lot, but just to make the things complete. Also, I want to tell you this. So $5.05 of cash flow into my portfolio. And then last but not least, take another look at the performance. And first of all, the performance of my portfolio in 2021. And there you see, even in 2021, my portfolio outperforms the S&P 500 with a performance of 15.66% compared to the S&P 500 of 10.93%. So that's okay, that's good. And even with a drawdown lately, I still outperform the market by 5%. That's quite okay and nice. And as I started the video also here, last but not least, the performance overall since the start at the 2nd of December 2019, as I said, 63.78%. That's quite good. And as I tried to explain before, this will be my way for the future too. Just look for good and great businesses for reasonable prices, buy way under the intrinsic value, and then just let the companies do their work, and the market will go back to the fair value of every business sooner or later, and then you have your profit. That's the whole idea. This is what I will do over the long run, and then we will see how this will work out. And if you like the whole idea, then please subscribe to my channel, ring the notification bell to never miss another video. Like this video, this is also very important for the YouTube algorithm. And Then we will see the next time with another video, another analysis of another stock, and next weekend, of course, then also with the weekly update on my portfolio as every weekend. So see you soon. Take care. Bye bye.